Friday, December 12th. Mark the date, because years from now, financial historians will look back at this specific Friday as the moment the levee finally broke. On the surface, it will look like a normal day. The algorithms will trade. The talking heads on CNBC will discuss interest rates and unemployment claims. They will tell you the economy is strong. They will tell you we achieved the soft landing. But in the quiet, marble-lined halls of the Federal Reserve Bank of New York, a panic button is being pressed. They aren't holding a press conference to celebrate it. They aren't calling it stimulus, and they certainly aren't calling it quantitative easing. They have buried it under a layer of technical jargon, so dense, so boring, and so complex, that they hope you won't notice. They call it reserve management purchases. It sounds safe. It sounds like a plumbing fix. It sounds like responsible housekeeping. It is a lie. Starting this Friday, the Federal Reserve is officially restarting the engine of money creation. They are injecting $40 billion of newly printed cash into the financial system every single month. And they are doing it at a time when the stock market is at all-time highs, and inflation is still burning your paycheck. Why? Why turn on the fire hose when the house isn't on fire? Because, behind the scenes, the foundation of the U.S. banking system has quietly snapped. Welcome to the Finance Detective. Here is the thesis for today's file. The United States financial system is currently insolvent. It has run out of cash, again. That $40 billion a month? It isn't to help you. It isn't to lower your mortgage rates. It isn't to build infrastructure. It is hush money. It is liquidity injected directly into the veins of Wall Street to prevent a seizure. The Fed is telling you this is a technical adjustment to help with tax season. They claim it's just a minor tweak to the balance sheet. I am going to show you the data that proves this is actually a desperate bailout. We are going to deconstruct the RMP deception. We will look at the shadow banks that broke the machine. We will trace the money flow to show you exactly who gets paid. And we will demonstrate why this specific injection is the Trojan horse for a system where you own nothing. The system isn't fixed. It's on life support, and on December 12th, they are increasing the dose. To understand the lie, you have to look at the engine room of global capitalism. It's called the Repo Market. Most people have never heard of it, but it is the grease that keeps the entire global economy spinning. It is a $5 trillion a day market. This is where banks, hedge funds, and money market funds lend cash to each other overnight. They use U.S. treasuries as collateral. It is supposed to be the most boring, safe, and liquid market on Earth. But the engine is broken. To understand why, we have to go back to the crime scene. September 2019. Back then, the Fed was also trying to shrink its balance sheet. They thought the system was healthy. Then, on a random Tuesday, the cash suddenly evaporated. Banks stopped trusting each other. They refused to lend. Interest rates in this boring market exploded from 2% to 10% in a matter of hours. The financial heart of the world skipped a beat. The Fed panicked. They printed billions overnight to force the gears to turn. They realized the system was addicted to cheap cash and could not survive withdrawal. Fast forward to today. The warning lights are flashing again. The reverse repo facility, think of it as the banking system's emergency savings account, has been drained dry. It went from $2 trillion down to zero. The buffer is gone. If the Fed doesn't print on December 12th, by January, the pipes burst. ATMs stop working. Corporate payrolls bounce. The credit markets freeze. They aren't printing to stimulate growth. They are printing to prevent a cardiac arrest. But who is draining all this cash? Who is breaking the machine? It's not you. It's not small businesses. It is the shadow banks, specifically the hedge funds. There is a casino game being played on Wall Street right now called the basis trade. Here is how it works. It's simple, and it's dangerous. Hedge funds notice a tiny price difference between U.S. Treasury bonds and Treasury futures. It's a fraction of a penny. To make money on a penny, you need leverage. Massive leverage. So, these funds borrow billions of dollars in the repo market to buy treasuries. Then, They use those treasuries as collateral to borrow more billions. They loop this trade 50, 60, sometimes 100 times. They are leveraging the entire US debt market to squeeze out a tiny profit. This trade creates an artificial demand for cash. It sucks the liquidity out of the banking system like a parasite. The Fed knows this. They know these hedge funds are leveraged to the hilt. If the Fed stops printing, the cost of borrowing goes up. The basis trade blows up. The hedge funds collapse. And because they are intertwined with the big banks, the banks collapse with them. So, the $40 billion injection isn't for the economy. It is a bailout for the gamblers. The Fed is stepping in to be the dealer of last resort to keep the game running. There is another pressure point, an external one. For decades, the United States had a deal with the world. We print dollars, and you buy our debt. China and Japan recycled their trade surpluses into US treasuries. They were the guaranteed buyers. That deal is dead. China is dumping US debt to defend its own crumbling currency. Japan is selling treasuries to prop up the yen. The BRICS nations are actively moving away from the dollar. So, the US government is issuing trillions in new debt to fund its deficit. But the foreign buyers are gone. Who is left to buy the bonds? The domestic banks are full. They can't buy anymore. The hedge funds will only buy if the Fed gives them cheap cash. This brings us to the terrifying reality of fiscal dominance. The government must sell debt to survive. If no one buys it, the interest rates skyrocket and the government defaults. So, the Fed has no choice. They must print money to buy the debt themselves. They can call it RMP. They can call it technical adjustments. But in reality, it is debt monetization. The United States is paying its credit card bill by printing its own money. This is the exact same spiral that destroyed the Weimar Republic. It is the exact same spiral that destroyed Zimbabwe. The only difference is the scale. So, why the rebranding? Why lie about what it is? Because quantitative easing QE is a signal of crisis. It scares the public. It tells the world that the emergency never ended. If Jerome Powell announced QE4 today, with inflation still sticky and the economy supposedly strong, credibility would vanish. So they invented reserve management purchases. Their defense is technical. They say, in QE, we buy long-term bonds to lower mortgage rates. In RMP, we buy short-term bills just to manage the plumbing. This is a distinction without a difference. Here is the most basic law of finance. Money is fungible. When the Fed buys $40 billion of treasury bills, they take those bills out of the hands of investors and replace them with cash. Now, imagine you are a bank or a fund manager. You used to hold safe, interest-bearing treasury bills. Now, the Fed took them and gave you zero-interest cash. You can't sit on cash. You lose money every day to inflation. So what do? You have to chase yield. You take that $40 billion and you buy corporate bonds. You buy stocks. You buy AI hype. This forces investors further out on the risk curve. The Fed lights a fire in the basement and claims they aren't heating the house. It creates the exact same outcome as QE. Asset prices go up. The dollar gets diluted. And the illusion of prosperity continues for one more cycle. This leads us to the victim of the crime, you. Economists have a name for this. It's called the Cantillon effect. It describes the uneven expansion of money. When the Fed prints $40 billion, that money doesn't appear in your checking account. It doesn't appear in your wages. It goes to the primary dealers first. The mega banks, Goldman Sachs, JP Morgan, the institutional giants. They get the money before prices rise. Their purchasing power is maximized. They use this free money to buy assets. They buy the stocks that you can't afford. They buy the single-family homes in your neighborhood to turn them into rentals. By the time this new money trickles down to the real economy, by the time it reaches you, the damage is done. The money has circulated. Prices have risen to absorb the new cash. You get the inflation. They get the asset appreciation. This RMP program is a wealth transfer mechanism. It is a robbery in broad daylight, sanctioned by the state, hidden behind a boring acronym. They are diluting your labor to keep their casino open. Look at the charts. The S&P 500 is decoupling from reality. Real wages are falling while stock prices soar. This isn't a strong economy. It is a monetary hallucination. Now, the darker question. Why maintain this fragile system? Why not fix it? I believe this volatility is a feature, not a bug. They are purposefully allowing the system to become unstable. They are letting the patient get sicker. Why? So they can sell you the ultimate cure. The cure is the central bank digital currency, the digital dollar. When the next crisis hits, and with this much leverage, it will hit the repo market will freeze completely. The ATMs will stop. In that moment of panic, they will offer the solution. The old banking rails are too slow. They are too risky. We need a direct line. Open a FedNow account. We can inject stimulus directly to your phone. No banks, no waiting. It sounds convenient. It sounds like safety. But it is a trap. This RMP program creates the instability that justifies the lockdown. Once that switch flips, it's not just about money printing anymore. It's about total control. It's about expiration dates on your savings. It's about negative interest rates taken directly from your wallet if you don't spend fast enough. They are breaking your legs today, so they can sell you the wheelchair tomorrow. So, Friday, December 12th, is the marker. The printer is warming up. The media will push the melt-up narrative. They will tell you to buy the top. They will tell you FOMO is your friend. Do not get distracted by the green candles. This is not a bull market. This is currency devaluation disguised as growth. If your stock portfolio goes up 20%, but your cost of living goes up 20%, you didn't get richer. You just ran in place while your money died. The system is exposing itself. They are showing you their hand. They are terrified of deflation. And they will burn the value of the dollar to prevent the debt from imploding. Use their fear to your advantage. Harden your assets. If it can be printed by a committee, it is a lie. If it relies on a counterparty, it is a risk. Gold doesn't have a server that can be turned off. Bitcoin doesn't have a CEO that can be pressured. Land doesn't go bankrupt. The $40 billion injection isn't a stimulus. It's a warning. They are debasing the currency to save the regime. Don't be the one left holding the paper when the music stops. I'm the finance detective. Next week, we are releasing the insolvency list, the top 10 banks with the highest exposure to the repo crisis. You need to know if your money is parked in a burning building. Subscribe.